Look at this mechanical sorting line. The entire high-speed operation grinds to an immediate halt the second a single asymmetric sphere enters the mechanism. Enterprise accounts receivable operates on a similar expectation of uniformity. The ultimate objective is straight-through processing, or STP, where incoming payments are matched to open invoices automatically, without human touch. The core misconception in enterprise software is treating cash application as a purely deterministic, binary matching problem. Systems are designed to look for a perfect yes or no. This diagram illustrates that exact baseline assumption. The software expects a clean mathematical equation, where a $10,000 invoice aligns seamlessly with a $10,000 payment, yielding a 100% STP match. But watch what happens when the customer pays only $9,500. The equation breaks, the checkmark shatters, and the system generates a red alert for unapplied cash or a deduction. That $500 discrepancy is a disturbance variable. The customer intentionally or unintentionally paid less than the open receivable, converting the transaction into an anomaly that requires deep contextual interpretation. A single common short pay reveals the limits of the symmetrical model. Accounts receivable requires contextual reasoning that simple document matching cannot provide. Current market leaders rely heavily on front-end artificial intelligence tools, specifically optical character recognition and natural language processing. Nearly every leading vendor utilizes the industry-standard cash application pipeline, mapped out here in this linear flowchart. Modern AI successfully automates the early stages, ingesting bank files, extracting remittance text, and normalizing payment data rapidly. Despite near-perfect text extraction, human operators still step in to resolve thousands of daily transactions. The algorithms read the text, but they lack the capacity to understand situational nuance. As the flowchart shows, the linear architecture structurally fails when confronted with messy cases like partial payments or cross-company settlements. The entire pipeline backs up at the exception work list and deduction management stages. Static rules engines treat these deductions as generic errors to be pushed to human analysts. The system discards the high-signal data points contained within the customer's short pay. Achieving theoretical limits of straight-through processing requires abandoning the magic box automation model in favor of domain engineering. Cash application must transition from a document processing task into a Bayesian process of uncertainty reduction. Returning to our $500 short pay, that specific dollar amount communicates a direct or indirect reason from the customer. The system must decipher that reason to clear the balance. This tree diagram visualizes the sheer volume of potential business causes hidden within that single mathematical discrepancy. Here on the operational branches, the deduction might stem from a trade promotion allowance, a volume incentive rebate claim, or a direct pricing mismatch against the contract. On the supply chain and compliance branches, the exact same $500 could represent a short shipment, a freight dispute with a carrier, or a cross-border tax jurisdiction mismatch. A valid early payment discount sits in the exact same data bucket as an unauthorized deduction or a duplicated claim until the system proves otherwise. Each of these branches requires a completely different resolution path, distinct accounting treatment, and routing to a specific workflow owner. Traditional matching rules instantly fail here because they cannot parse this multi-domain intent. A simple clearing problem devolves into manual chaos. To automate these complex cases, the AI architecture must pull contextual signals from outside the isolated accounts receivable data silo. This central nexus, labeled context engineering, illustrates the convergence of external enterprise data required to validate a claim. Supply chain integration feeds directly into the nexus, allowing the system to cross-reference customer short pays against proof of delivery and warehouse confirmations. Contract data streams in simultaneously, ensuring the architecture can verify the invoice price against agreed-upon customer trade promotions. The system calculates customer behavioral probability by reviewing historical data to determine if a specific client frequently duplicates claims or reliably deducts for freight. Gathering and synthesizing this multi-domain context upgrades standard automation into true deduction science. Exact relational database matches cannot process this level of variance. The platform requires a multi-layered classification engine. This vertical 5-layer funnel visualization demonstrates the architecture of a domain engineering system evaluating a messy case. Layer 1 executes exact deduction recognition. It uses Boolean logic to find perfect matches in claim numbers or debit memos. The automation confidence begins to rise. Layer 2 performs rule-based matching. It applies strict business rules and tests small balance tolerance constraints. Layer 3 utilizes fuzzy matching to parse messy, incomplete, or truncated string text hidden in remittance emails. Layer 4 applies historical pattern matching, deploying Bayesian prior probabilities based on that customer's unique deduction history. Layer 5 activates AI and machine learning classification. Using models like XGBoost, it predicts root causes and next best actions, pushing the confidence score past the posting threshold. The system then assigns an expected recovery amount and automatically routes the categorized deduction to the correct department. The technical objective is never a binary match. The objective is to progressively reduce uncertainty until the confidence score safely permits automated posting. Business AI application platforms like Bayflex.com execute complex mathematical friction at scale, shifting operations from repetitive manual execution to intelligent automated orchestration. For every single invoice discrepancy, the platform calculates this comprehensive formula. The function in this equation relies on probabilistic reasoning to evaluate 12 distinct evidence variables. It completely replaces static if-then statements. The calculation transforms raw data into actionable results, generating specific output variables, the predicted category, the validity probability, and the precise resolution path. Business AI handles this massive data-heavy lift flawlessly, but algorithms lack the human intent, the ethical context, and final accountability. Mile Deep Critical Thinking, or MDCT, provides the essential human-in-the-loop operational framework required to navigate this high-powered AI landscape. This explainable matching dashboard shows how an MDCT practitioner interacts with the platform. They shift their role from a data entry clerk to an auditor of a complex decision system. Under the principle of evidence validation, the human operator treats the AI's output as a highly probable draft that must be verified against primary sources. Explainable AI establishes necessary trust infrastructure. The operator sees exactly why a decision was made by tracing the confidence score back to the delivery receipts and pricing contracts, rather than trusting a black box. An operator applies reflective iteration. When they correct a messy case, that manual adjustment serves as a vital signal for the continuous learning loop. This human-in-the-loop intelligence and proactive curation forces the system to evolve and strengthen in real time. By combining business AI platforms with mile-deep critical thinking, deductions become first-class intelligence objects that establish enterprise finance as a proactive, scientific decision system.